Hi, everyone. My name is Susan Gruser, and I'm with ALM Global. And I'm very happy to welcome you today to our webinar on the financial implications of cannabis-related businesses. Today, we have Professor Frank Snyder, who is doing the presentation. He is with Texas A&M University School of Law. He's really uniquely positioned to do this presentation because he teaches contracts, business associations, business fundamentals, and he has, as well as being a law school graduate from the University of Missouri at Columbia, University of Missouri's Columbia School of Law. He has an LLM from Temple as well. He also has practiced as an attorney at Latham & Watkins, where he was a partner. He is the author of several law school texts and law review articles. And I think most importantly for all of us, he teaches a course on marijuana law, policy, and business. So without further ado, I'm going to turn the presentation over to Professor Snyder.
All right, thanks, Susan, and howdy from Texas, everybody. I'm delighted to be here to talk about three issues that are extremely important in the cannabis business. They're extremely important in every business, but there are wrinkles in cannabis, as I assume all of you know, that make them especially interesting from my perspective and important from yours. Those three are corporate governance, banking and finance, and taxation, and I will take those in order. Now, this is the very, very 50,000-foot view of what's going on. We'll be taking questions at the end if you have them, and I will try to answer. Keep in mind that there literally are no experts in the cannabis field. They're just people who are working like dogs to keep up with what's going on and try to translate that information to the rest of the world. So let's start with corporate governance. Wild West entrepreneurship in an age of strict compliance. So I always start with this because clients often get a very rosy view of the legal status of cannabis. And we'll be talking about corporate governance and why it is really, really, really important, particularly in the cannabis industry. If you're running a cannabis business, you're guilty of aiding and abetting every crime committed by the business, which makes you liable as a principal for every one of those. You're guilty of conspiracy to violate the Controlled Substances Act, which is a separate crime. You're guilty of conspiring to commit offenses against the U.S. The same act can violate all three of these things. You're a person who's part of an enterprise that is engaged in at least two acts of manufacturing, importing, receiving, consuming, buying, selling, or otherwise dealing in marijuana, which means you're a RICO violator. If you've received proceeds from the business and deposited them, you're guilty of money laundering, and anything that you bought with those proceeds is property derived from unlawful activity. So when you talk to clients, when you talk to people in the industry, they think the odds of getting hit with any of these things is very small, and it is. It's like being struck by lightning. The odds are that none of your clients, none of your companies are going to get hit with these penalties, but if they do, it's going to hurt like hell. Now, while you're probably not going to get hit by lightning, it's a very wise thing to avoid doing really stupid things like standing on top of a church steeple, flying a kite in a thunderstorm. All right? That's, no matter how unlikely it is you'll die, is not a very smart thing to do. And so it's important in corporate governance to make sure that there is zero chance, or at least 0.000000001 chance of any of this happening to you. All right, if you're a cannabis company, if you're any company in the world today, there's a target on you, right? Somebody is out there looking to see if you have done something wrong, and they are perfectly willing to sue you over it. So you're carrying a big target on your back, and it can come from state regulators, from state law enforcement officers, from federal law enforcement officers or agencies, very often from unhappy investors, from angry creditors, or disappointed transaction partners. All of those folks, if things go wrong, will look to go after your business. Now, there are special problems with cannabis firms when it comes to governance. First off, it's a dangerous world out there for businesses. You're there in your businesses surrounded by sharks, or in many cases, lawyers. I love the legal profession, but many of you don't. And the lawyers are always circling, trying to find something to sue you over. This becomes more difficult with the cannabis realm because cannabis folks have a myriad of regulations and problems that many others don't. Trying to sift through all the various regulations that come down, all the FDA rules, all the banking rules, everything going on, is very time consuming, requires a lot of attention. The problem is many clients in this field are not people who are good at coloring within the lines. They tend to be risk takers, entrepreneurs. They tend not to be the kind of people who are really good. By the way, I'm hearing some something on the line from someone there. They're not good at the kind of people who are checking boxes on forms with due care. And that means what you've got is a dangerous environment for business. You've got lots of very complicated rules and people who are not good at following the rules, which means governance becomes extremely important. Now, there are a number of common problems in governance that we see over and over and over. The first one with small new businesses is they have no governance procedures at all. When I talk about governance, I'm talking about structures for managing, running the business, and ensuring that there is compliance with all the various rules that need to get followed. Some of them just start the business with really no procedures at all. Others, to get their license, had to send in some documents about how they're running their business. So they fill them out, like get them off the internet, they fill them out, they staple them to the application, and they mail them in. Then they put them in a drawer and never pay any attention to them again. And failure to follow your own governance procedures is one of the things that can get you in serious trouble. And many cannabis businesses have conflicts of interest issues because many of the folks involved in them are connected in some way and have other entities. So there are built-in conflicts that come with your boards and with your enterprises. Then there's a lack of transparency. And it's hard to criticize companies engaging in illegal businesses for not letting everybody know what's going on inside the business. But transparency in modern business is extremely important, especially with any facts that might affect someone's decision to invest in the business. Then virtually all these companies, except the largest, suffer from inadequate boards of directors. Boards of directors tend to be made up of the founders, their spouses, their friends, other people in the industry. A good board of directors has to have a wide range of expertise and contracts that can help the company go along its path. They also have to be independent, such a way that the owners who are running things have some sort of shield between them and are held responsible to the investors. Boards need to be, members of boards need to be selected, recruited, trained, and monitored in order to be successful. Many companies have inadequate reporting systems. Again, every dollar that you are spending on doing something other than producing, selling, marketing your product is viewed by many people, many business people, as a complete waste of time. And so taking time off to make sure all of the data gets collected and gets reported out through the correct officer, the correct system, is viewed as a waste of time. However, it's critically important that reporting systems be in place in order to protect the business and the officers of the business. Then companies have inadequate compliance programs. They have a program in place that is supposed to work, but it's not followed through. They don't have a system in order to make sure that when there's a problem down on the production line, it surfaces up to management attention. And an important thing to keep in mind, and the reason why I assume many of you are watching this program and looking at these kinds of resources, is compliance is not a job for amateurs. You can't just go read the federal regulations and take a whack at responding to them. You need to have people who are trained and specialize in making sure that the rules are being followed. Some of these problems are illustrated by some of the major recent claims over the last couple of years, the ones that hit the big headlines. Canopy Growth failed to disclose weak demand for soft gel and oil products. Investors are claiming that that was a securities law violation. Hexo misstated allegedly its inventory, failed to report some other operational problems. There may be issues there of whether the senior management even knew some of the particular operational problems. Kronos Group had to revise an earnings report that caused the stock decline. And if you're in business, you know that whenever the stock takes a major decline, a lawsuit follows. Trulieve Cannabis was allegedly misleading investors about the risks of crop contamination with mold. Tilray was charged with omissions in its proxy statement regarding key financial figures regarding a prospective merger. So all of these are potential claims, and the way to defend against them is to demonstrate that you had a good reporting system and that all of the rules were consistently followed. So the best practices in corporate governance, and we can share these with every other business, but again, they're particularly important in the cannabis sphere. You have to have a tailored governance framework. You can't download something off the internet and say, this is how our corporation or our LLC is going to be run. You have to be able to know who is responsible for what. We all know in the business world that if two people are responsible for something, neither of them will take personal responsibility for it. And the more you have involved, the less responsibility there is. You need a strong, effective board of directors. You've got to recruit them, you've got to train them, you've got to engage them. They have to do more than meet once every 6 months for a brief agenda and lunch. And you have to have a way to evaluate them and make sure they are contributing. A good board of directors is a company's best friend in terms of making sure that things go well. The company's interests and the interests of management and the interests of investors are all protected. You need transparency. That's regular, reliable reporting systems, especially to the board. The board has to be able to know every single thing that happens, and there have to be individuals responsible for providing that information. You need consistent, complete records, consistent document retention. To the extent that you can demonstrate what happened and you've done a good job, that goes a long way to defending yourself. Of course, complete records combined with really sloppy procedures can get you into worse trouble. But as part of the overall process, you need to be able to document what was done and why. There has to be a business-wide emphasis on integrity and ethical behavior. Now, every business will tell you that we have integrity. Every business tells you that we're ethical, and most of them are. But emphasis on integrity and ethics has to come from the top. Everybody has to know that it's on them to make sure everything is done well. Again, you need strong documented regulatory compliance. Specific employees have to have responsibilities for specific aspects of compliance. That means you need regular training of employees, which is a huge waste of time from the perspective of many business folks who hate watching the stupid training videos, who hate sitting in the meetings. But that's critical. Not only is it critical to train the employees, it's critical to be able to demonstrate that you did train the employees in the event they go off the rails. And then the company has to have continuing risk management assessments. That means somebody's got to be out there all the time looking at the potential risks that are surfacing. The bigger the business gets, the more critical this stuff becomes. When the business is very small, you may be able to get away with sloppier procedures. But as you get larger and the amount of money at stake grows, the risks become significantly larger. Now, the good thing about this, if you do follow a good governance system and you do find yourself complying strictly with law, you are extremely unlikely to get struck by lightning. The DOJ, Department of Justice, can't use appropriated funds to prosecute you if you are fully in compliance with state law. The Cole Memorandum recommends against prosecution, and pretty much every U.S. attorney in the country is following it. Good governance makes it much more likely you'll be strictly complying with state law. It means you're much less likely to run into problems. And to reiterate, complying with complex regulations is not a job for amateurs. There's a crying need for professionals out there who can advise cannabis businesses in these regards. All right, I could say a whole lot more about that. We've only got an hour today, so I'm going to switch over to banking and finance, where the situation has changed remarkably little in the 7 years I've been teaching this course. We're still on the brink of unknown problems and unknown perils. I assume you all know the problem. The number of banks working with marijuana businesses is very small. This data from about a year or so ago is unchanged and might even be smaller. Basically, there are 222 industry-friendly banks. That means really do some kind of thing. There are about 130 banks that are actually friendly to cannabis businesses generally, going down to 99 banks in the entire country that are willing and happy to do business with cannabis licensees, the people who are actually touching the weed, as the term goes. It's difficult to find these institutions. They're out there, you can get them, but they don't tend to advertise. You need to be able to work your way into them. Now, the problem with banking, and you'll see a lot of articles about why banks should get involved in the marijuana business, why they'll make money, why there's no risk to them. But basically, they're all governed by the Bank Secrecy Act of 1970. And what that act provides for is federal oversight of transactions within the banks. The system, banks have to have a system of internal control to assure ongoing compliance. They have to provide independent testing for compliance. They have to have individuals who are responsible for coordinating and monitoring day-to-day compliance, and they have to provide training for appropriate personnel in order to monitor transactions for unlawful activity or for activity above a certain minimum threshold. And there are two things that the Bank Secrecy Act, well, there are many things the Bank Secrecy Act does, but two primary things that are relevant. The first is what's called currency transaction reports, and you're all familiar with those. Those are anytime you deposit or withdraw $10,000 or more from a bank, the bank has to file paperwork with the regulatory authorities documenting the transaction. Now, when the Secrecy Act was passed, the BSA was passed in 1970, $10,000 was a lot of money. The median wage in the country was $8,500. The average house was $17,000. And so almost no one would ever be involved in a currency transaction report except when you sold a house. Today, of course, there are many folks whose monthly paychecks are enough to trigger the CTR reports. And so a vast amount of transactions now are processed regularly by the authorities. For our purposes, the significant one is something called suspicious activity reports. These are reports that banks and financial institutions have to file when they have reason to believe that something fishy is happening, when there is a crime being committed, when there's no explanation for where the money is coming from, anytime they think there might be something, again, something fishy about the transaction, they are required to file these SARs. Now, the outfit that's in charge of these things is the Financial Crimes Enforcement Network, which is called FinCEN. And back in early 2014, they released their statement regarding transactions with marijuana-related businesses. And strikingly, on the website today, this is still the basic approach that they are taking. Every transaction with a marijuana-related business requires filing a SAR, which means every bill paid out of a checking account, every check received into a checking account, every one of those has to have a SAR filed by the bank, which is expensive. It requires dedicated staff who are handling those things. And failure to document transactions that should have been on a SAR can get banks into a great deal of trouble. Now, banks exist by handling very large amounts of money and taking a very small slice of that very large amount. And so when the costs of handling an account go up, such as having to file a suspicious activity report on every single transaction that comes through a normal cannabis company business account, those costs add up and make it unprofitable. And failure to do a good job can get you sanctions from the government. Bankers are not known for being risk takers, and therefore most banks, in my view, quite legitimately, are very leery about getting into this field. And they're also concerned about the banks that are getting into this field are the banks that are saying, okay, we're going to really specialize in this. And instead of charging low monthly maintenance fees, we're going to charge big whacking fees so that our costs in doing this are recovered. Here's the basic rule. A financial institution is required to file a SAR if the institution knows or has reason to suspect that any transaction, this is the big one, involves funds derived from any illegal activity. Selling marijuana is an illegal activity. Even in states where it's allegedly legal, it is illegal at the federal level. And so every marijuana business, at least those that touch the weed, triggers a SAR. So a financial institution has to do these on everything a marijuana-related business does. That's costly. Now, FinCEN has certain priorities about what action it will take on these issues. The goal is to prevent distribution of marijuana to minors, to prevent revenue from going to criminal enterprises, to prevent diversion of marijuana from legal states to others, preventing state-authorized marijuana activity from being used as a cover for other illegal activity, preventing violence and use of firearms with respect to marijuana businesses, preventing drug driving, other public health issues, preventing the growing of marijuana on public lands, and possessing or using it on federal property. Those of you in the East, that's not as important as those of us in the West, where some states are 90% owned by the federal government, which creates potential problems. But those are the priorities. In order to balance the costs of sending in the SARs, FinCEN has created something called the marijuana-specific SAR, marijuana-limited SAR, I think is the correct terminology. And so if it's a licensed marijuana business, it's an abbreviated SAR. You don't have to go into all the details, but you still have to do it. Nevertheless, when you're dealing with a marijuana business, it is the bank's job to do due diligence on all of these things. The bank has to get itself comfortable with all these things, which means, for example, it needs to know who owns the business. It needs to figure out whether those owners have ties to other businesses or to illegal activities. It has to have some way to ensure that minors are not buying marijuana. It has to be able to reasonably believe that the marijuana is not being shipped out of state, that it's not being produced on federal land. And those are expensive things to do. That kind of due diligence costs time and money. And so many of the specialty marijuana banks have essentially been hiring agencies to track down the owners and make sure that no criminal records. They put video cameras in the shops. They monitor the transaction logs of the marijuana businesses. In other words, they take a lot of time and effort to make sure that the companies are complying with these rules and regulations. And if they do comply with them, then they will generally be in good shape. And an occasional mistake will probably not get anyone in trouble. But if they begin to see a pattern that the bank is not really doing all it can to make sure that kids don't have drugs that were brought across state lines and gone on public lands for the benefit of criminals, then they can suffer significant penalties. Now, the financial institution reasonably believes, based on its customers' due diligence, if it doesn't implicate one of the memoranda, it can file a marijuana limited SAR. And that's relatively simple, right? The information on the subject, the addresses, the fact the filing institution is filing the SAR, and the fact that it has no additional suspicious activity. Those, when submitted to the federal government, invoke the penalties for false statements to the federal government. And so if you lie on one of these things, or your employee lies, or your employee doesn't know whether there's been any additional suspicious activity and signs it anyway, the bank can get into a serious amount of trouble. Now, if it turns out that you or a bank, you or your employees know that your marijuana client implicates one of them, you may be prosecuted. And if you're willfully blind, again, you may be prosecuted. And even if your client doesn't implicate any of their priorities, the government reserves the right to prosecute you anyway. Is there any wonder that ordinary bankers don't want to stick their hand in this particular blender? The best that comes out is that you're not injured. Now, the SARS, marijuana priority, details on expected violation. Now, there are red flags, and I won't go through them all for time, but some of these things are signals that you should be, the bank should be keeping an eye out for. Having substantially more revenue than your local competitors, or that might be expected, the bank's got to figure that out. More cash than reported for tax purposes, that means they have to get your tax returns of the business. Cash withdrawals over a short period of time may be excessive. Again, look at all these various things. Deposits by third parties with no account holder. The name on the account is nondescript. If it's called ABC Enterprises, that's a nondescript. If it's called ABC Medical Marijuana Distributor, you're okay. But a whole lot of businesses have nondescript titles, including the entity producing these videos, ALR, right? Individuals, again, just this whole number of things that as a banker you're supposed to be keeping an eye on. Is there, how far is the school from the facility? Are you supposed to be a nonprofit, but you're engaged in commercial activity, which of course is perfectly legal for nonprofits. Now, one of the difficulties is that there's a catch-22 here. If you are a bank and you don't want to do this, you're blocked out. If you are a bank that decides to settle it entirely to handle only cannabis businesses, as one savings and loan was started in Colorado, so you could specialize in doing this, the FDIC will deny you your license on the theory that you'll now be a captive of the industry. So banks that are specializing in it risk their licenses by doing it. Banks that are not specializing in it have no incentive to get involved. So that's the current banking situation. Again, we've seen almost no progress. The one ray of hope out there is the Bank Secrecy Act, which is pending in Congress. It has a lot of support. It would simply allow banks to go ahead and take money from marijuana businesses as with any other business. The problem with that, it is so popular, it's a bargaining chip for every side. One side will only agree to it if you get these particular provisions in, the other side will agree to it if you get the other provisions in. And so right now it's a political football. And whether or not that will change when the new Congress gets installed is anyone's guess. All right, let's talk about the special issues of taxation for marijuana. We all know the importance of taxes, right? If this is the total sales of your business, some chunk of that money has to cover the cost of goods sold. Whatever you bought that you're now reselling. Some chunk of it has to cover your rent, mortgage, equipment, all the other expenses of your business. Some chunk of it has to cover labor, and the remainder has to cover, or the remainder of that is your profit. That's the normal situation. So what happened back in 1981 was there was a drug dealer who sold drugs out of his apartment, marijuana, cocaine, I think methamphetamine, some other things. Well, he filed a tax return for his drug dealing business, and he deducted his labor, his rent and mortgage, and his cost of goods sold from his taxes. Now, the tax court said, well, yeah, the income tax means income. It's not income if it's deducted from your profit. Only the profit is income. So the federal government reacted, Congress immediately reacted with gross income means all income from whatever source derived. So the drug dealer was unable to deduct the labor of his flunky distributors. He was unable to deduct his home office, which the tax court had let him do. He was allowed to deduct the cost of goods sold simply because the Constitution provides that the federal government has the power to tax incomes. And basically, if you sell something for less than the cost of goods sold, it can't be income. So in the marijuana businesses, all of these things are now not deductible. So this is Section 280. No deduction or credit shall be allowed for any amount paid. This is trafficking in controlled substances, which is prohibited by federal or state law. It's simply targeting the drug industry. Theoretically, cartels, well, not cartels, but theoretically, gangsters can deduct the cost of their bullets when they are in order for hire business. They can deduct the cost of their getaway cars and all that. But if you're dealing in controlled substances, you don't get any of these things. So as an illustration of how this works, assuming your business has $1 million in total sales, and let's say that there's 10 boxes here. Each one of these is 10%. 40% of your business is cost of goods sold. 30% is your other costs, rent, mortgage payments, utilities, supplies. 20% is your labor. You've got 10% gross profit. Well, the taxable income then would be $10,000. The federal tax would be at the current rate, $21,000. You'd have an after-tax profit of $79,000. Well, if it's a marijuana business, the only thing you can deduct is cost of goods sold. So in effect, what you've now got is a taxable income of $600,000. Remember, your gross profit is only $100,000, but you're going to be paying income tax on $600,000. And at 21%, that means your tax will be $126,000 more than your gross profit, and you'd be left with a net loss of $26,000. Now, this means that marijuana businesses have to have a very skewed approach to profits. They have to get profits that are extremely large, relevant to their cost of sales, to even be able to break in. Now, there are two broad workarounds that folks have tried to develop for Section 280E. The first is what you can think of as horizontal affiliation. That means you have a couple of different businesses that are affiliated with each other, and they're each part of a dispensary location. In other words, you put the dispensary in a spa location, in a store that sells merchandise, a store that sells clothing, and you allocate many of your other costs and your labor costs to the non-marijuana part of the business. Just as in a hospital, only part of the hospital's overhead would go to the hospital pharmacy. The second is vertical affiliation. That is, you own a distributor and you sell marijuana from the distributor at inflated prices to increase the cost of goods sold of the distribution business. To illustrate those two things, we can take what I call the horizontal affiliation here. Suppose you've got a nice big facility, and down in the corner, you put your marijuana business, which is organized as a corporation or LLC. And that has 95% of your sales. 95% of your sales comes from the weed, the oils, the illegal items. Then you've got a t-shirt and novelty store that actually gets 5% of your business, but controls 80% of the floor space of the business. So what you could do if you're trying to be clever is you can allocate 20% of your costs of labor to the marijuana business, since only 20% of the total floor plan, and allocate 80% of the costs and labor to the t-shirt business. Now, this does not amuse the IRS. Obviously, if you have this kind of business, some amount of labor and overhead could be allocated to the t-shirt business, but it's going to have to be a whole lot more than a whole lot less than 80%. If you allocated it 95.5, the IRS would say fine. If you allocate it if you allocate it 20 to 80, the IRS comes after you. And as we all know, in the business world, at least when it comes to taxes, pigs get fat and hogs get slaughtered. And so we're seeing a number of cases working their way through when companies have decided to be really clever, which is not a good thing to do. In my view, the mileage may vary. In my view, it's really not a great thing to do with the Internal Revenue Service, because they hold almost all the cards in these kinds of transactions. So that's one workaround. The other workaround is to manipulate transfer pricing. What that means is you have vertical affiliations of businesses. The same people own a grower, producer, they own a manufacturer, a processor, and they own a retailer or a dispensary. Now, what happens is the grower sells the manufacturer, the processor, the profits. Now, it is actually a sale because the books of the grower processor out here have to be reflected that something's gone out and something's come in, because they're an independent tax entity, right? So there is a sale marked on the books, and then there's a separate sale go to the retailer dispensary. Now, these sales have to be set at a particular price. Now, note the difference there. The grower producer, I didn't make this clear earlier. but grower producers of agricultural products like marijuana can deduct all of their costs. All right, because cost of goods under the code, cost of goods of an agricultural business or a mining extraction business includes the cost of growing the crop or digging the stuff out of the ground. So your labor costs on the farm, your fertilizer on the farm, your rent on the farm, all those things are deductible. Down here, they're not. So obviously, it makes sense to want to put as much of your, to reduce or to increase the cost of goods sales for the manufacturer and the retailer and offload as many costs as possible onto the grower producer. Now, these same entities may also, so there'll need to be a price, which will be reflected on the books. They call this transfer pricing. We're not familiar with it. Meanwhile, the same companies may own other businesses. They may own the real estate firm that leases to the grower, the manufacturer, the retailer. They may own a testing firm that provides services to those. They may own a transport firm. And all of those, not being marijuana businesses, are able to deduct their ordinary costs. And these services will wind up providing services to all these various businesses, which means that by manipulating the prices of these things, you can try to get as much of the money as possible up here in the grower and out here into the related firms. And since the owners control all the prices, they can try to do that. Now, to some extent, again, you can get away with this. To some extent, there is some leeway in going about things. And so at the margin, this can be a helpful strategy, at least for larger, very diversified businesses. But the IRS is very leery of transfer pricing. They tend to look at it very closely whenever there's a reason to think that there might be a problem. If there are two interrelated businesses that are both in the United States and not involved in any illegal drugs, then the IRS doesn't really care much, doesn't care as much about which company takes the profit, because it's going to be taxed in one or the other of them. However, when there's a reason to question these, such as moving costs that would not be deductible by the manufacturer to the grower or to the real estate firm or to the transport firm, or when the transaction is international, where you may be able to get different tax rates applying, they look at these things very closely. And so, again, getting a little too greedy with respect to these things will bring the IRS down on your head with a significant amount of force. So your basic tax strategies in dealing with the IRS: keep really good records. Marijuana businesses are often not known for this historically. Nowadays, they have to be among the very best at making sure they have good records. You need to have very good accountants, and you better not get greedy. Some of these cases are percolating up now through the court system, through the tax court, the IRS procedures. And you need to know that the IRS is not going to cut a marijuana business any slack. A small mom and pop grocery store in upstate New York, yeah, maybe they'll cut you a break. A legal, quasi-legal marijuana business, no way, they won't do for it. And so far, it's hard to say with definiteness, but basically at this point, the IRS on these issues seems to be undefeated, at least where clients are getting a little too greedy. Now, there are a few attacks going on Section 280E. There are some legal attacks. The section's unconstitutional because it taxes money that's not income. That's based on the 16th Amendment. I won't go through these in detail. Lawyers will be more interested in it than most of you here. Unconstitutional is excessive fine under the 8th Amendment. And there's even some hint that the federal government may decide that Supreme Court may decide in the future that the Raich case in 2005, which held that the feds could regulate marijuana entirely in state marijuana operations, was wrongly decided. That was Justice Thomas's approach, and in a recent opinion, he brought the issue up again. All right, well, that's what I have for you today on those three big issues. Corporate governance, make sure clients are complying with the rules. Taxation, make sure the tax is effective. Make sure you're in compliance and maximize your tax strategy. And the banking and financial situation. I want to take a minute right here at the end, especially those of you interested in the tax. I cannot recommend high enough the TF Tax Facts book. It's simply designed to provide all the information that you're going to need. As a watcher of this video, you can see the tax 420 code to get 10% off any print or ebook, and the link down there shows you where you can get them online. Moreover, those of you out there in the insurance business know that insurance is the new frontier. Cannabis is the new frontier for insurance. I'd urge you to take a look at the Cannabis Insurance Coverage Specialist program that's being designed. I've heard about it. I think it's a terrific idea. I think there's a prime need for these kinds of people. You can learn all about that in the future. So you can look at the link below. So that's about 46 minutes. Wanted to leave some time for questions. Thank you all for being here. You're in the most exciting industry, well, maybe space travel. The next is space travel, the most exciting industry to come along in my lifetime. So.
Thank you very much, Professor Snyder. We really appreciate you taking the time to do this presentation for us today. It was really instructive and, as you say, very, very timely. I live in New Jersey, so I was telling Professor Snyder I was getting emails all morning that there are 13 new dispensaries that will be starting to sell recreational marijuana tomorrow. So for me, it was, very apt that we were doing this presentation today.
Well, and I was telling Susan that this field changes so rapidly that no one really is an expert. All we are people who are paddling, doing our hardest to keep up with what's going on. So that's all we can do until things eventually settle out. So the fact that you all are here learning this stuff, and I learn things I'll probably learn things listening to your questions. So.
Yeah. So if you do have any questions, as you are all muted, if you can include them in the chat, but we'll just go through the questions we have so far. Just administratively, some people had asked if they would get copies of the presentation, and I had noted in the chat that yes, we will be sending out for everyone who attended the webinar, we will be sending out a copy of the video and the slides for this presentation. So for the discount for tax facts and the cannabis insurance specialist training course, well, you'll have those links that you can see in the presentation. So I do have a question that came in. Does the government/IRS view proceeds from foreign investments where cannabis is legal in a different way than those operated in the United States?
Yes, it does. There are special rules for international taxation for money gained through operations in foreign countries. I have to tell you, that's beyond my pay grade. I know there are specialists in international taxation. The same thing, they do apply transfer pricing rules for those things too. So if they see you, for example, stocking up on the money in Canada and charging, very high prices to your U.S. subsidiaries, they will come after that. I know that. Beyond that, I can't tell you the international transaction.
Okay. I don't know if we have any other questions. That's the only one I have so far in the chat. I'll just wait maybe a second in case there are any other questions. Okay.
Yeah, well, one of the, look at this ad, one of the really great things over the last 3 or 4 years is the growth of people who are specializing in those industries, lawyers, accountants, insurance people. And they're desperately needed. My students who wanted to go, my law students who wanted to go into the cannabis field have been very successful doing that. There's more work than people can handle. And so there aren't many opportunities out there like this for folks who really want to get a leg up. And those of you who are insurance folks out there, you know all the hidden landmines that are out there for cannabis businesses. You know all about all the exclusions, all the limitations, all the things that come up in regular business policies that just don't work in the cannabis space. And so I'm really looking forward to being able to find some people I can send the occasional people who talk to me with.
Yeah. All right. Thank you again. I guess if there aren't any other questions, again, thank you, Professor Snyder, for presenting for us, and we will send the slides around to everyone so you have them. Oh, wait, I do have another question.
Okay.
If or when insurers can write a cannabis-specific policy, what would be the key areas of coverage?
Oh, wow. There are a couple that spring to mind. The first, of course, is covering the plants, covering the contents of the facilities. Ordinary, homeowners policies for people growing the stuff at home, have a limitation often of $1,000 on the total of all the plants you can get in the house, and therefore, if you are providing insurance to homeowners who have home grows, you need to make sure that they're going to get paid some reasonable amount for the cannabis plants as long as they have designated them. I mean, I think that's significant. There are cases out there which have held, it's not the majority opinion, but there are cases that have held that marijuana plants themselves, the marijuana businesses, can't be insured, at least in federal court, because it's illegal. And to allow people to get insurance for their illegal activities and the views of those courts is like providing workers' comp insurance to hitmen. You're out there doing something dangerous and illegal. Insurance shouldn't help you do that. Now, people are going to need to work through this. Obviously, insurance is a 50-state, probably Puerto Rico and Virgin Islands, but there are at least 50 different insurance regulators out there. And so the key is going to be looking at the standard policies in those states and figuring out what the issues are. I mean, there are pollution exclusions, there are I have a little segment I'm doing now. I'm blanking on some of the things right now. But there are the illegal activities exclusions that are routine in business policies. Those are going to have to be modified. And people are working on that now. The new companies that are actually offering cannabis insurance, I believe, are addressing those particular issues. But you just have to, a cannabis business, an illegal cannabis business is going to be different in all those various ways. And, insurance companies usually want to pay off legitimate claims, but they don't usually want to pay off claims when there's any doubt about whether they are legitimate claims or not. And so, insurance companies need a lot of comfort in this area, just as the businesses do.
I have another question that came in that's actually a really long question. So, in addition to the currency transaction reporting, Banks must also perform advanced due diligence on the client and ongoing transaction monitoring. I think that's supposed to be one word, ongoing transaction monitoring.
Yep.
And suspicious transaction reporting. Are you aware of any cases where banks have been fined or charged with failure to meet these requirements?
No, I haven't. I am not a banking lawyer per se, and my suspicion is that there have been fines, but they're not usually made a big public deal of because they're. I haven't heard of anything where the government has come hammer and tongs at any bank so far. Again, that doesn't mean there are regulatory mistakes all the time in the banking industry. So I can't say that there have been none. I don't know of any at this point.
Okay. I also just have a note from someone that says the Cannabis doesn't cover business income or theft. I'm assuming that's an insurance policy. I'm not sure if but it's CANNA-BOP, doesn't cover business income or theft.
Okay.
So I think that was just a note somebody sent in.
Okay, I appreciate that. I'm not. The acronym is not. Again, I'm a general business lawyer, and I touch a little bit on all these things, and I'm not sure what that acronym is.
Cannabis. Here, she sent a note. It's Cannabis Business Owners Policy.
Yeah.
Yeah.
Okay.
So
it doesn't cover what?
It doesn't. Now I have to go back to her original email.
Sure.
It doesn't cover. I think she said theft.
Yeah. Okay.
Yeah, business income or theft. So I think that was just a note from somebody in the insurance industry based on our kind of insurance discussion.
Yeah, that's very helpful because and you can see one of the problems in insurance always. One of the problems is the tendency of people to think that, oh, if I can get somebody to steal my marijuana crop and the insurance company pays me for it, I can go sell the marijuana crop elsewhere.
Yeah.
So there's that. Why am I blanking on the very common term for that? The risk of taking advantage of things. So that would make sense. Now, I'd love to talk to the woman. She seems to know about this. But you've got to balance all those kinds of things because stealing a car from a car dealership and stealing marijuana from a marijuana dispensary are two very different things with very different people likely to do it. And therefore, that makes a lot of sense. It's going to take a lot of thought. I mean, really, to get these policies in place and get them to the point in every state where they are useful. It's going to take a lot of work. And right now, owners are hanging out there, and insurance companies many of them are hanging out there. So it'd be good to see what happens in the future.
Yeah. We have about 2 minutes left, so I have one more question that came in. What additional resources would you suggest for an accounting manager helping a vertical medical cannabis company navigate 280E?
Ooh.
Very specific question.
It's a very specific question, and I wish that there was something out there that I could recommend. I think you could write a terrific and very popular text on that issue because right now it's scattered all over the internet. There's a whole lot of, for those of you interested, there's a website called mondac.com, MONDAQ.com, which has lots and lots of guidance provided by legal and accounting firms to their clients that deal with cannabis. And it's free, you just have to register for it. And you can sift through all kinds of those things. It would be lovely if someone would create a guidebook, a handbook for accountants dealing with these kinds of issues. I'm not aware of one, I'm sorry.
Okay. We have one more question. I'm not sure I'm going to be able to get this right, but it says, I will be covering a FAM. I'm not sure if he means a farm in OKC very shortly. What should I be looking for as we live in Colorado?
I'm not sure. I'm sorry. I'm not sure I understand the question.
I'm not sure I understand the question either. We also, someone asked the name of the website that you had just mentioned.
It's called Mondak, MONDAQ.com.
Oh, okay.
All right. And let me tell you, anybody, I'll just tell you this, if you have a specific question, I may or may not be able to answer it, because as somebody who teaches like the entire world of cannabis, I tend to have a very high level view of things, not so much of the details. But if you go to just make a note of this, you can go to the Texas A&M Law School website. You'll see me on there, Frank Snyder. My email's there. If you want to send me an email and ask me something more specific, I would be delighted to answer it. I mean, I love talking about this stuff and trying to help people figure out where they're going. So feel free to do that.
Okay, great. We are at the end of all of our questions. Thank you again, Professor Snyder. We are out of time. And thank you also for attending, everyone who is here today.
All right, thanks for being here all. Thanks.
All right, bye-bye.